Also a big day for Bitcoin, wicking above that critical level at 24,000. We covered yesterday that we had that really important weekly close. Bitcoin came out on top and has followed it with another offensive at the 24k level mark. This is now the third time at trying to break this level. Loads to cover off. What happens if we do break this level? Where could we run up to? Because I'm getting ready for my next big trade, and also there's some important macroeconomic elements to cover off which could wreck you if you're not paying very close attention. Guys, don't forget to smash the like button. Don't forget to subscribe. Let's check out this chart here. And as we can see, this was the weekly close we covered off yesterday. As you can see, we close it just above the blue line. But that is all important because it means we've held it as support. And if you recall in my video yesterday, I said all we need to do is finish this above and then get a big strong week the next week. And as you can see, we've had a big strong open up to this week here, which is amazing. And you can see here, we've been as high as 24,100. Now, I'm going to show you the key levels zooming in onto the hourly, but this is a good setup now, right? If you just look at this from a weekly point of view, that is what you want. Whether we finish the week or not like this, that's what we don't know, right? Will the bears come in later this week and push us to make this candle appear red and maybe even lose that 200-week moving average? But if it closed like this, how it's opened up here on a Monday morning, then wouldn't everything be fine and dandy? But don't get caught out, right? You can obviously have loads of optimism on a Monday morning, and then as the market comes out with various economic pieces of data, which we're going to cover off, it can throw you back down to the downside. Now, let's look at the excitement here on the hourly, because a lot of people are covering this off, and this is the big move here now, going to fight that 24k level. If I zoom out a little bit, what I want to show you, in fact, let's go to the 4 hourly just to show you what's going on. You remember we've got this 24k level here, and we've been rejected twice. Right, so you can see this is our first point of rejection, this is our second point, and now we're going for it again. Are we going to get the breakout? We are forming an ascending triangle pattern here. So you can see if we do get the breakout, the price target does take you all the way up to about 29,000, 30,000, which has confluence with many levels which we've been talking about. I mean, if we show you, just to give you a couple of ideas around why that 30,000 level works for me, you guys will know if you've been watching my videos, I can believe a relief rally up towards 30k. First of all, look how quickly we dropped from that region. We dropped very quickly from this region all the way to the downside. So I fully expect that to be recovered just as quickly to the upside. If we bring out the VPVR, you can see this is where all the volume was traded. This is where the bears and the bulls are fighting. They're playing tug of war. But once you get victory, once you get over that critical moment, look how thinly traded this area is up until the 30,000 mark where the volume comes back in. So the VPVR indicator shows you that this move can happen quite quickly as well, which also gives me confidence that once we do get the 24k, and I'm not convinced we've got it just yet, but once we do get the 24k, we can have a nice move up towards 29-30 regions, which is where you'd want to be taking your profits. Okay, now also what is giving me confidence around that area, let's go to the weekly chart. And if I bring out the EMA ribbon on the weekly chart, you will see that, let's just get zoomed into about this region here. And you'll see here, once we run into our EMA ribbon, where does the EMA ribbon start from? It starts from 28,000 and you start working your way. So 30,000 brings you onto the second notch here of your EMA ribbon. So I can perfectly vouch for a relief rally up until this point, and then we'd have to be expecting some resistance from the bears. So that 30k region gives you confluence on this chart as well, which marries up nicely. But we've got to bring in some macro elements as well. And we know that on Wednesday we get our CPI reading. We get the CPI reading for the previous month's figures. So that will be your July figure coming in on August the 10th. Now, what is the market expecting? Well, you can see that the previous month was 9.1. Now, the market is expecting this to come in, the headline figure, to come in at 8.7. So if I show you this as a line chart, you want to see this inflect down. You want a reading lower than 9.1. Anything above 9.1 and the market is going to have a poo again, because then they're going to have to expect that the Fed will come out aggressive with their next rate hikes. Remember, we've been covering this off extensively because, as you know, on this channel, we like to bring that blend of technicals and fundamentals, that the market is more and more pricing in a 75 basis point rate hike. Last week, they decided to rotate, right? We saw all that hopium come in and they were saying, oh no, we're only going to see 50 basis points from the Fed. But now we're starting to see that the rationality come back again, because inflation and the jobs figures continue to remain high. Okay, we had the non-farm payrolls last Friday, and that came in high to the high side, which is suggesting that the market is still strong. We're not in a recession, and therefore the Fed still needs to keep their foot on the pedal to increase interest rates. Okay, so that is what the markets are worried about. You've also on Friday got the Michigan Sentiment Survey. This is very important. You want to look out for this as well. This gives you an indication of if normal people, normal consumers, day-to-day people are expecting inflation. Now, why is this important? Because Jerome Powell looks at this figure. Because if consumers are expecting inflation, they act upon that belief, and that affects the economy. They'll reduce their purchases, they'll delay their purchases, that will affect businesses, and that can have a knock-on effect as well. So very important that we monitor that as well. Let's jump straight back into the charts, but before doing so, we can see Fear and Greed Index is sitting here at 30, and if we go back over, what I do want to show you was this chart which I was sharing with you. You remember here on the 4-hourly chart I was showing you a pattern, and the pattern was we'd have these continuation patterns followed by breakout, continuation pattern followed by breakout, continuation pattern followed by breakout, and then we had our next one. And what I said is we broke out and we needed the retest, right? And we got exactly that. So if I zoom in here, you can see that we bent over, retest with good strong volume coming in. Look at the volume candles here on the 4-hourly. You always want to match that up with the volume. And now we're well on our way to pushing onwards. But what have I always said we need? We need that higher high. Where was the peak of the previous high? The peak of the peak right here was 24,700. We need to get above that. If I show you that from this perspective on this chart, it's all well and good us being where we are right now. But if we cannot get above this peak, we haven't created a higher high. We have to create a higher high so we can keep our uptrend. What we don't want to see is us getting rejected from here, because then we can start having to come back, and then I get worried about a break to the downside back into our channel. Because remember, this ascending channel can break to the downside, right? This is a bearish continuation pattern. We can break to the downside. So if we do not get a good strong volume break above that peak there, then it's not something to get excited on, and you don't want to front run this trade. You want to be patient. You want to wait for that clean breakout, because this is not going to run too quickly, right? You can wait for confirmation and enter in on this trade, because you're looking to ride this up towards 29.30. So you can wait for a nice clean breakout, get the higher high, get the daily candle close above there. If you look at it from a daily perspective, you want to be looking for that daily candle above that high. We're not just there yet. You can see a big strong daily candle, but we can still get rejected at that 24 level now. So you want to see that get above this line here where my cursor is. Really, really important. And if you want to see my charts, guys, a lot of you have been asking to see access to my charts, to my patterns, to my notes. You can now do so using CoinPanel. So I've gone ahead and set up all my charts, including my watch list, on CoinPanel, and you can go see my Phantom charts, you can see my Bitcoin charts, and I'll be adding many, many more charts on here, so you can see the exact patterns I'm referring to in the videos, and I put some notes in there for you guys to access as well. So I put the price target, I've put the notes and some comments on there, so you can check out the link in the description, coinpanel.com/ejaz, to access my chart patterns here on CoinPanel. Now, let's take a quick look here at what I do want to look at is the dollar index. So let's take a quick look here at the Dixie. And what we can see on the Dixie is you've had this leg of downward period, right? So if you take it from the peak of where it got rejected at about 109, it fell all the way down to 105. And this is what's allowing, remember, this moves inversely correlated to Bitcoin. This is what's allowing Bitcoin to get some momentum here recently. But what we don't want to see here is we don't want to see the dollar index bounce from its EMA. And so far, unfortunately, it looks like it is getting some support from its EMA. You can see the bounce happening here on its EMA ribbon. You've got a good green candle there, another green candle there. It's acting like support, trying to push it back up. And if it does and tries to go post a higher high above 109, this leg could mean bad for Bitcoin. So we don't want to see that come into play. We want this to break down. We want the dollar index to break down and really have an extended period to the downside. Ideally, we want to see it come and test its weekly EMA ribbon and come towards 104, 103, 102 into this EMA ribbon, even down to 100 would suggest a nice run for Bitcoin. When Bitcoin goes on its crazy bull runs, that is when dollar index has actually inverted on the weekly chart, flipped bearish on the weekly, and gone on extensive moves to the downside. These two rejection points were the bottom for Bitcoin when Bitcoin decided to go on massive runs. So if we see the same thing here happen for dollar index in the current time, that could suggest a nice run for Bitcoin there as well. Now, another thing I wanted to share, which was very interesting, was the Bitcoin dominance. We continue to see Bitcoin dominance over the last couple of days was falling. We've got a little bit of a green day today, but we are seeing Bitcoin dominance at quite low scores. I mean, local lows here are around the 39 mark, and we're not far off it now. We're at 41. And that is still suggesting to me, and this is one of my kind of concerns, just thinking out loud, that people in the markets are still speculative, right? They're still buying altcoins. They're still FOMOing into the market and buying a lot of interesting coins. So how can we believe that that's the rationale for us to be at a bottom? Because if historically you look at it, a bottom is characterized by peak fear in the market. In fact, we can do this together. Let's pull this out and let's go identify let's do this together. Let's go identify the previous bull run and where you bottomed out. So Bitcoin in the previous run up to 20, we saw that, and then it collapsed all the way to the bottom, went on another run up towards 13, and then fell back down. So let's take this down here on this specific candle on the 9th of March 2020 is when it bottomed before the run up to 64. Okay, so we'll take that on the 9th of March 2020. Let's go look at Bitcoin dominance on that exact date. So let's go take a look at Bitcoin dominance on the 9th of March 2020. And what you'll see, just getting there. There you go, 9th of March 2020, Bitcoin dominance was sitting at 66. 66 up here, guys, 66, okay, on the 9th of March 2020. Now, if you put that into context, Bitcoin dominance is sitting here at 39. So there's still a lot more speculation in this market than there was at peak capitulation. And whenever we've looked at on-chain metrics, this has always been one of those things in my mind which says, okay, fine, you can have a relief rally up to 29.30, but I'm not convinced that we're ready to go back to all-time highs just yet. I still feel like there's more that needs to go on. It just doesn't feel like a normal market. There's still people buying. There's still people FOMOing in. It just doesn't feel like we've had complete capitulation yet. So that is something I'm watching, but it doesn't mean I'm just procrastinating and waiting. I'm still all in on this market. I'm 85% in the market, and I've got a little bit of cash on the sideline to buy the dip. I'm not going to sit here with all my money out saying, no, we're definitely going to go lower, right? Because Bitcoin doesn't work the way you want it to work. So you need to put your emotions to the side and you need to follow the data. Right now, the data is saying Bitcoin wants to try break 24 again. I need to make sure I'm in the market. Otherwise, I'm going to miss the move between 24 and 30. Simple as that. I hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe. Big week ahead with CPI and Michigan Sentiment Survey. Please stay very, very safe out there if you are trading. If you want to see my notes and my chart patterns, coinpanel.com/jars. I will be updating my charts on there, and I'll see you in the next one.